Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets and the markets related to the metals. And without further ado, we'll jump right into gold. Miles, from a technical analysis standpoint, what do you have to show us?
Sure. In a couple weeks of technical analysis to catch up on. As you guys are aware, we were out of town last week, but glad to be back in the studios and looking at a few weeks of charts ending out January and February, and some pretty substantial movement worth pointing out in the metals as well as the equities and the dollar. So we're going to hit all of those today. Starting off with gold, looking there at the end of January. We did come into and test the early January highs, the 1611 highs. We came into the right shoulder of that move. So if you look at the shorter term chart, the 15-minute chart, you can see we came right into those pricing there at around 1590 and have reversed back down from there. Now, we had some compression up that we broke above and have now since broken below. So if I'm a betting man, what I would like to see over the next, let's say, week, since we've broken that floor, we've taken 2 steps down on the shorter time frame charts, and we're starting to see some RSI divergence here on the chart. I'd like to see another third final step down, then a short-term reversal up, maybe over the month of February, closing the month out somewhere in the 1575, 1580 mark. And then, guys, I'm going to say it again, finally, I'd still love to see that drop back down to maybe as low as 1485.
Well, I hope you're wrong, obviously, just because it's fun to see it climbing and to go set a new high, but it's actually healthier for a market to have a little reprieve like that and be strong for all the right reasons.
Right, which we haven't had. I mean, the closest thing we've had to any type of correction on the fib scale would be the 382 or pushing just below in any of these last subsequent moves we've had over the last few years. So to have anything that says take a breather definitely allows you to pull that bowstring back and reload, so to speak. So we'll just have to see how this plays out. But since I do like to pull out the magic 8-ball from time to time on the show, that's my prediction over the next week and certainly over the next month. A little bit more down in the short term, reversal back up maybe by the end of the month, and then hopefully pushing into full go election season this summer. Some declining gold prices would actually make sense from a political standpoint as well. Nobody wants things to be ugly in an election year. We saw what happened in 2008. The last time we had a major market crash amidst the '08 election, and I don't think anyone else wants that again.
Well, Miles, we've had a lot of short-term movement this week, mostly news-based, with the Iowa caucus, the disaster that was.
Right.
You got the coronavirus that's moving, all markets, commodities, equities. We had another pop in the Dow today because now we're not so worried about the coronavirus. That's at least the news that, Yahoo Finance and such are putting out. But we saw some big swings in silver this week as well. We had a couple days where, we saw a drop of 2+%. The ratio kind of remained unchanged. I think we're still sitting right around 88.5. But what do you see on the horizon for silver? Do you predict it's just going to follow suit with gold on these on the step back down and then a little pop back up, or do you see something different developing for silver?
Sure. Even silver's short-term bullish. I mean, we haven't really done much of anything to suggest lower prices on silver quite yet. Now, we have had some lower lows, little interim lower lows, and we did just put in a lower high. But we haven't even come down to test any of the previous support levels from like end of 2018, beginning of 2019, longer term pricing. So silver, if I had to guess, I'd say probably over the next couple months as gold, if gold does what I think it's going to do, and that's push down here over the next few months, silver follows suit, pricing out probably somewhere around the 786 fib level that I'll draw on the chart here, or maybe even a little bit lower than that if possible. Now, when that does happen, you've got a nice geometric pattern compression here where you could reverse to what we call a 1-4 correction line through Elliott wave theory. I can draw that on the chart, so that makes a little more sense. And then a reversal back up from there, which probably does bring us into that $23 to $25 range. So again, it's trying to figure out what are we going to see over the next week, over the next month, over the next year. Gold, I think you can see some very clear short-term patterns playing out here, which lead us towards those longer-term movements over the next year. Silver's just playing. in between prices. So it's easier for me to look at this and say, what does the next 6, 12, 18 months of the silver chart look like? So until we see something that resembles a break above the previous highs or below the previous lows, and we're right smack dab in the middle of them. So I'm just guessing at this point on silver, but I think it makes sense that we'd follow suit with what gold is doing. And as you bring up the ratios, when silver does make that correction back up, the percentage gain eventually has to start outperforming gold. So even if they're both going the same direction, silver tends to be more volatile and the percentages tend to be bigger.
And Tori, on a more fundamental basis, Miles has got all of his spots on the chart, but as we kind of alluded to earlier in the show, there's a whole lot of news events stacking up in 2020, starting, with the Iowa caucus this week. If we get, one of these further than left candidates like a Bernie or Elizabeth that really starts to look like it's going to be the DNC's solution or choice, do you think that will have a bigger impact on the metals right now because it is an election year?
Well, I think it would. I think we would absolutely see the metals rally. You see it in little short-term blurbs, and personally, I think today's rally has a lot to do with the stability that has been assumed from the acquittal of President Trump in the impeachment process, that trial. That's just now official as we're recording that they have acquitted him. And so you're going to see a rally. You've had back-to-back 500-point days in the Dow, which is just huge market rally. And you can say, okay, yeah, it's that. It's, obviously the instability in the Iowa caucus type of thing had nothing to do with a market rally. But I think what did, you asked me a fundamental question. And to me, the reason that gold is staying where it is and you're seeing such a huge 2-day 1,000-point rally in the Dow, normally you would see gold come off sharply, and it's not because it's an injection of capital from the Federal Reserve. So you've got $94 billion in the repo market this week, 64.5 in short term that was completely unexpected, another 30 that's a little bit longer term that was expected. So clearly there's some underlying liquidity issues in the markets that the Federal Reserve is trying to support and prop up and keep off the radar, keep behind the scenes, keep completely quiet. And we don't know what that is necessarily, but it's a big red flag to me, and all the more reason why gold shouldn't correct if we see this continued repo market effect. I know you want to see the 1485 miles. I just think until the markets are truly stable, it isn't going to have a chance to come down that far.
Tori mentioned the Dow a few times with these big 500-point days. Miles, you and I have had talks over the last few weeks about palladium reaching this point of being parabolic. I just want to point out what Tesla has done over the past 3 days, because Tesla hit that point of being parabolic. We saw a 15% jump, I think 2 days ago. It was up $100 or so. In the last 6 minutes yesterday of the session, Tesla dropped, I think it was $80. It just plummeted back down.
$107.
$107? Yeah. And then today you see another drop of, I think 18% in Tesla. So that's that parabolic behavior we were explaining with palladium. Do you feel like the Dow is reaching that point as a whole with these pops? Are we reaching this bubble where we're going to see erratic moves up, and then a big correction down? Or are you not too sold on that yet?
I'm not too sold on that as the Dow as a whole, personally. I mean, the Dow is still blatantly bullish. We've obviously had some bearish cracks. I mean, that 19.5% drop, 2 Decembers ago, certainly shows the writing on the wall. But ultimately, when you're talking about individuals, especially in the tech industry, which I think arguably Tesla, I'd put Tesla in the tech industry more than I'd put them in the automotive industry personally, even though they are an automotive company. But what you're talking about is emotional buying, right? I mean, Tesla, love the company or hate the company, love the product or hate the product. I don't know enough about cars to come out and say Tesla is the best vehicle man has ever made by any means. Maybe it's pushing towards the next great leap in the transportation industry. It's just that's not my realm of expertise. Others out there obviously know more than I do. But I don't know if you can tell me that Tesla's valuation, especially on the New York Stock Exchange, is based in reality.
Well, that goes to your point about it not being really an automotive stock, right? People are investing in it because of the technological breakthroughs that potentially come out of there. Because if you compare it to Ford, and you look at its value versus Ford, and Ford produces, 1 million plus vehicles a year. What's Tesla doing? So Tesla, I agree, it's not an automotive stock. That's not why people are chasing it.
Right, and you can say the same thing about like the big Facebook crash that happened after all the private information discussion that took place. What was that, 10, 12 months ago? And lo and behold, Facebook takes a dive. I bought Facebook after that dive personally, and then sold it again here recently because you knew it was going to rebound. This gets back to my old saying about fundamentals versus technicals, right? I mean, fundamentals are just emotional reactions to things. Mm-hmm. So fundamentals dictate the velocity at which the market moves up and down, but it doesn't dictate the trend or the direction. Traders do.
Right.
And long-term investors do. So that's why I prefer to look at things like the Dow, the NASDAQ, the S&P, because you're looking at a broad swath of the market in general. So you're getting to see how not just Tesla's doing, but how it compares to Apple and Procter & Gamble and General Electric and Ford. And you can look at the market as a whole. And from that standpoint, the economy, according to the Dow Jones and the NASDAQ, still is arguably bullish and continuing higher. Now, with that being said, the Dow did take a 4.5% drop again. So percentage-wise, 4.5% over the course of a week or two is a fair bit of movement. Now, it ain't 20, but it's still pretty substantial.
But it's also healthier than just running unchecked. I mean, we're at an all-time high today, right? And this goes back to our gold discussion earlier. We're at 29, almost 300 on the Dow, 29,300. But we did have a healthy 4.5% pullback. You're up over 1,200 points from the low we just put in.
Right. Now, you compare that to what I like to do, the industrials versus the transports. The transports took a 7.25% drop, and they haven't rebounded anywhere close to what they fell. So you're still seeing this long-term disconnect between product and consumer. And it's the guys in the middle that aren't keeping up with the producers. The producer price, the stock price for the producers is still going up. The stock price for the transports are not. They've leveled out for the last couple years.
Yeah, but I'll argue there, Miles, that's coronavirus impact. Right?
Sure.
You get a almost
I'm
shut down.
I'm not agreeing with you on that.
You're not agreeing?
No.
Well, but here's the deal. Okay, everybody shuts down. Transport should drop, right? You've got major manufacturing issues coming out of the major source of manufacturing.
Right, but
okay,
I'm talking about a disconnect
issues.
That's been for 2-3 years running now. So
I
sure,
agree.
you're going to see these little interim moves.
I'm talking about the disparity in the 7.5 versus the 5.5 on the drop, right? And I'm talking about the rebound versus the lack of a rebound in the transports, because there's no proven stabilization of the coronavirus. Okay, and until there is, you're not going to see the transports have a chance to rally, are you?
No, and that's why you're seeing the energy sector fall off right now, because you've got declining demand for oil and gas and other natural resources over in China. And so, so there's definitely legitimacy there as well. But my point was more just the underlying belief, and it may just be my belief, but this underlying belief that the markets are not driven by what fundamentals actually mean, buying and selling of goods. Good old-fashioned Austrian economics are not what's moving the markets right now. It's emotional investment money and chasing returns.
It's printing.
And coronavirus
$94 billion
or not,
from the Federal Reserve. That's not a real market. I mean, where would the Dow Industrials be right now if we hadn't just done that? Where would the People's Bank of China be, right now if they hadn't just put in 500 billion renminbi into the Chinese equities markets?
Well, the Dow would probably still be down 4.5%.
That's what I'm saying. Like that is a manipulated market that's not a normal free market. And I know that you're hitting technical numbers, and the Dow's going to go to 30,000 before we even start sniffing about a pullback. But gold sits here in stable fashion, and the U.S. dollar is climbing right through all this too. Right. Because again, when there's uncertainty and concerns and fear, regardless of the source, you're going to see the dollar rally. You're going to see gold do what it's doing instead of pulling back. Gold really should be pulling back aggressively on an impeachment acquittal, right, with a guy who's been in charge of the markets turnaround for the last 3 years. And so you're not seeing that again. Fed central bank injection of capital and fear and uncertainty in the markets, gold's going to stay up.
Yeah, and I'm glad you bring up both hands of the dollar discussion, right? Because the dollar index is going up, which means international demand for U.S. dollars are increasing. while we are simultaneously continuing to put $100 billion or more a month into the markets. So, and that I think is the linchpin, at least in the short term, of my argument as to why I think gold actually over the next few months should go down, because regardless of our money printing, those dollars are getting soaked up on an international scale faster than we can print them out. Now, I think that catches up with us eventually. I just don't think it catches up with us in the next couple months.
Well, as we discuss, where the markets are at, you can clearly see where the value lies, right? We've got the Dow, the NASDAQ, and the S&P all closing at all-time highs, while gold and silver are kind of hanging out tough. Just want to give you guys a quick reminder that we've got until April 15th to still make those contributions to your IRA for 2019. It's a great way for you to take part in our ratio trading program. We can do all the ratio trades and help you compound ounces through a tax-deferred account. So give us a call, 1-800-525-9556.
As always, we appreciate you stopping by Golden Rule Radio this week. If you like what you heard, click the subscribe bell, ring the button, or do the opposite, and join us in the comments. If you have any questions, you can swing by our website, McElvaney.com. Find us on Twitter at ICA Gold or Facebook, McElvaney Financial. And as Eric mentioned, if you have questions about your retirement accounts or anything else in your precious metals portfolio, make sure to give one of the advisors at McElvaney ICA a call at 1-800-525-9556.
Thanks. Have a great week.